What's up, everybody? All the big names out earnings wise. First of all, everybody can hear me, see the screen and all? Thank you, thank you. All the big names out. Anybody waiting on any earnings of particular here? Before we get rolling? No big name tech, right? I mean, big name like, well, you got Facebook tomorrow and all that stuff. Today, what? Texas Instruments, one of the bigger names? All right, let's get rolling anyway here. All right, so welcome everybody. Tuesday post-game show. I'm Wall Street Jesus, as many of you are aware. And for those of you who are new, we get together every Tuesday post-market, go over some of the stuff we're seeing early on in the week, and try to come up with a strategy, a game plan for the remainder of the week, based mostly off sweeper activity and sentiment. That's all I look at. That's all I pay attention to. Nothing really much of anything else. And basically what we're seeing now is pretty simple enough. It's earnings flow, and more earnings flow. Obviously, outside of banks, we're at the start of earnings here. Okay, it's this one. This one's open to the public and riffraff, not just members. Every Tuesday, it's open to the public. Yeah, so basically, when it comes to the activity we're seeing now, we were talking about this last week. We're seeing primarily earnings positioning here. Really tough to get a gauge on both smart money sentiment, how the smart money is positioning via the options market, because there's a lot of hedging going on, a lot of stock replacement going on. And that's what I refer to as earnings positioning. Okay. So me, myself, anytime we're heading into this type of environment, I just like to chill out. I don't like to do too much. I focus primarily on day trading. And to be honest, even for day trading purposes, it depends on the market that particular day, what type of climate we're in. But you could see some momentum off these orders, on an intraday basis. You really got to be selective on what day you're trading if you're trading solely options. But if you can day trade the equity like myself, I'm day trading the equity, the stocks, you can scalp. And listen, you're not going to get rich. I acknowledge that. I'm looking basically, to be dead honest with you, I'm looking to keep myself busy, try to pay attention somewhat to flow and what names are catching action into earnings. Maybe they'll catch action post earnings. Try to get a feel if there's any sort of rotation going on as we slowly get through some bigger names reporting. But the reason I focus solely on day trading is to keep myself out of trouble. And the reason I can do that is because I'm day trading, like I said, the equity, and I can stop myself out in the snap of a finger. Okay. So I get into a position or some action. I'm looking to get in the middle of some buying. Hopefully it generates enough momentum for at least a scalp out of it. And that's it. Okay. But more importantly, it's keeping me in check to get through earnings season. And once we get through, the bulk of earnings here, the skies will start to clear up. Okay. You will see names that are catching order flow now, never catch action ever again. until the next time they report earnings. All right. And just the overall flow becomes a lot clearer. Okay. You can you can see the obvious. You can see when they're rotating. You can see the sentiment coming out of flow. Is it a bullish day? Is it a bearish day? Are they aggressively getting long on the call side here? Or, are they not buying much, which tells us to apply some caution. During earnings season, there's no rhyme or reason. Okay. I'll give you an example. Now it's an ETF, but we're seeing it in names too. IBB. All right. First, we see some size block protective activity come in on the put side. All right. So if you don't take earnings season with a grain of salt, you're like, all right, maybe they're getting a little protective in biotech. Apply some caution there. And then later on in the afternoon, we see call sweepers. And then we see a block of puts again. And that's totally normal. Okay, it's totally normal. Because like I said, for the most part, the type of action that I like to focus on and the type of action I stress to you guys day in, week out, the aggressive, the top shelf, the sharpest activity out there, those guys aren't playing earnings. Okay, and I'm not saying they're not holding through earnings. Of course they're holding positions through earnings. But more than likely, for the most part, they're not just looking to roll the dice, betting on a good quarter. Okay? More than not. So it's really, really difficult to try to get a handle on the best activity out there when it all looks the same. And it all, for example, like we'll see action in one particular sector, and it looks like they may be rotating into it, but coincidentally, there's some big leaders reporting numbers that week. And you would think that they'd stay committed and come back maybe the following week and continue to buy like they usually do, but they don't. All right. And there's a ton of names out there. There are a ton of names that they only catch order flow in the options market when they report numbers. I'll give you two off the top of my head. One Nigerian was pushed on CNBC today, Corning, GLW. Every earnings season, for some particular reason, it's a name that's active in the options market. Okay. And then, once they report their quarter's over, you never see these guys ever again come back and play. All right. HPE is another name, always around earnings season. Starbucks is notorious for, earnings positioning and hedging around earnings season. All right. And that goes for calls and puts, not just puts. That goes for everything. All right. So that's one of many reasons. Those are the primary reasons why I try to avoid making too much out of the earnings activity, because I've learned from experience that it's just, it doesn't paint as clear as a picture. All right. So, and I was thinking about this because I had somebody bring it to my attention the other day, and they asked me, well, if I was going to play, not me, but this individual was asking me about himself, if I'm going to trade anyway around earnings season, doesn't it make sense if I'm playing in options and I'm putting in what I'm willing to lose and sizing down? Wouldn't it make sense to just play earnings? Why would I avoid earnings anyway? And he raised a good point. If you're going to trade through this environment anyway, okay, and let's say you're being smart about it and sizing down, all right, and taking the approach that whatever you're putting into those calls, you're willing to lose, that's your stop loss, then what harm can come out of holding through the earnings announcement, right? You can't lose more than what you put in. Again, I'm talking about options now. If you're playing equity, you're out of your mind. All right. And at the same time, maybe you get lucky and you get a bigger move than you would usually see because of earnings. A lot of times, you're going to get frustrated. You're going to get a move to the upside. but because of the implied move and volatility factored in, you're not going to make money even though you were right. So that all goes with the territory. But the important thing to do is to, take it down several notches and try to find something to just get you through if you're looking just to trade off flow like I am. Okay. Now, the other thing too that comes in handy during earnings season, when the sentiment stuff we look at. All right, and I'm a big proponent of that. There's no reason to look at that stuff as an exact buy sell indicator. That's where you're not getting the full value out of sentiment as a whole, and you're just going to get yourself in trouble that way. All right, but the proper way to look at it, and you can see from the last couple of sessions here, if you're going to look for a trade anyway during earnings season, okay, and you can be tactical, meaning you can buy something, and if you get that quick rip, you can sell it a couple days later. In other words, you're not looking to hit the home run, the big enchilada. You're just looking for trades. Sentiment can be a huge asset, because if you're buying when sentiment's on your side, there's a good chance you're looking to buy weakness. And a lot of these names, they're supported until they report. Some of these big tech names, they come down for a day or two, and then there's buyers coming in because they're not going to let these things fall out of bed before they even report. All right, so again, the common denominator that you could see is within every single one of these things is that you're looking to do something less. Okay, hopefully you can make a little bit of money. Worst case, you lose a little bit of money, but you're not getting clobbered. All right, and it's all too often that people get clobbered in earnings. You see somebody roll the dice into an Apple quarter, and Apple beats, but they were light on guidance, and the stock falls out of bed for that particular day, or something that happened to Netflix recently. And you got players out there scratching their head. Oh man, how'd that happen? Why is Netflix getting killed? What about all that call buying in Netflix into earnings? Why aren't they getting paid? So for some of you, it may sound like I'm beating a dead horse here because you've heard this out of my mouth several times, but I will continuously get people on Twitter and new people in the room who will remark like that. And I have to get this out to try to prevent too much of that. All right. But the good news is, as we come out of earnings season, as some of the bigger names announce and we get done with them, that's when we start to see the real positioning take place. Okay. What these guys are looking to get aggressive behind as we come out of the summer here. Where are they looking to rotate? I'll tell you one spot that I feel we really got screwed on. Were the financials. I think the financials were a picture perfect setup as we were going into earnings. Sentiment was a disaster. Nobody wanted to get long the financials. You even had people, the gurus on Twitter out there talking about shorting the financials into the hole. Okay, so sentiment couldn't get any better. The issue was we were seeing a little bit of call activity. We were seeing some decent call activity, but they were getting ready to report. So what we were hoping for was maybe some further weakness off the earnings, or even if they did nothing but continue to buy them like they're doing now, we would have had somewhere to hide while we're waiting for the bigger tech stuff and other things to report. And look what the financials are doing now. It kind of got a little too crazy here, to be honest with you. A lot of these financials are already, scorched. I mean, you can't chase them here. Now you got to wait for another little breather here. There's JP Morgan. So, listen, that's past tense anyhow. That's spilled milk. I don't like to really harp on that. The game plan going forward now, because we're seeing them get aggressive out of earnings, when these things are weak, when they're red, when they're consolidating, now we have to pay attention to these names again. Okay, so when JP Morgan, Bank of America, Citigroup, when they come out of them at some point here in the future and go into tech again for a couple days, don't ignore these things. Don't ignore the banks. If we see some buying start to come into them again, or if a little pullback, they're worth eyeing because the demand is there for these things again. And every single one of these things. I mean, down here, and I'm not just saying it because they rallied off the lows. A lot of us were talking about it on these webinars. You had everything here. The Bank of America in particular, which we know can catch a ton of action. That's what we were waiting for. And it took earnings to attract it. You had the 9 there, exhaustion 9, where it usually finds a bottom there for at least a tradable rally. But earnings got right in the middle of it. All right, so the banks, again, here, tough. Off some weakness or even a little consolidation like we just had here. See a couple little days of breather where people forget about them and get shaken out of them. That's what we want to look to see if they get aggressive and get back in these things. And it could be a nice spot to hide in while we try to avoid, some of the tech names and other names that still haven't reported yet. All right. The other stuff out there, like, for example, tech, and this is what we talk about, meaning support these names, up here, just like the Microsoft, I mean, let's pull that one up in particular. It's tough to really have any confidence or a bullish opinion up here now. You know what I mean? So what I've noticed a lot of times, especially with tech and these bigger names, is that they'll have a day or two of weakness before they report, and they don't allow these things to fall too out, too out of favor, basically. In other words, you don't see that much weakness. You'll see a couple of days like this, and then you'll see buying come back into them. They support them. So, it's hard to get a measure of how much run is still left from here into earnings. I'm just using Facebook as an example. I know they report any minute now, any day now, but just in general, Salesforce, another one, right? Sometimes you see some weakness. You had some weakness today. Maybe I'm just using an example again. You get another day of weakness tomorrow, and you look for some sweeper activity into that weakness for that snapback type trade. CRM is notorious for that. Okay, not as an earnings bet, but again, just as a trade, that snapback red to green and maybe a little extra type trade. All right, but that's all I got. There's nothing else. Like today, there was a ton of action out there, especially early morning, a ton of action. And right now, if you ask me what was my favorite action on the day, I couldn't tell you. There was nothing I got excited about today. I think the best looking bet today, and maybe because it was in the name it's in, and it catches earnings anyway, was a bull combo in Crocs that caught earnings. And the reason I say that is because there were sweepers everywhere. There were size blocks everywhere. Both calls, puts, you name it. All the action looked the same. So I can't just pick and choose, out of a hat what action I like the best or what name I like the best. They were pretty much everything caught the same exact flow, and that's earnings flow. Here's some of the size action today. If you guys are curious, some of the names you're holding or looking at. LBTYK, that's way out of the money calls, 10 cents block, a lot of blocks you can see here. CBS puts, GGP, New York Times puts, GM reporting, I think tomorrow morning. Wells Fargo, you guys know I've been telling you Wells Fargo, even pre-earnings, one of the better financial names, flow-wise, continues to see some decent action. This was weekly nonsense. Intel, September block. IP, Okay, IP caught some pretty decent activity today, but earnings. If IP caught this type of size without earnings, it would be, it would be a special situation, but that's not the case. Snap. Here's, what I pay attention to anyhow. Here's some of the call sweepers on the day. Cheapy Bank of America, ENT, little $2 stock. Facebook was pretty active early morning, likely off the Google number. They wanted to rush into Facebook. What else we got? Bank of America, AT&T. They had earnings at the bell. Cheap Baba. This was a decent looking sweep. SGMS, October's. You guys know I like that name. They're reporting in early August. Some home building flow out there. You got a couple of them reporting, DHI in particular. SVU, it's some pretty aggressive action there, earnings. Here's the name GRA. I never see action in this name unless it's earnings season. It never catches flow unless it's earnings. It's a steal type play. And sometimes, I used to get frustrated a lot because you would see some really good solid aggressive activity out there, and then you find out it's earnings related and you're pissed off, and then the stock runs anyway, and now you're even more pissed off because you didn't play it. But I've been around the block long enough that it bothers me at times, but I can't let it get to me. It is what it is, and it's easy for me to point out the winner off earnings flow. But trust me, there's a reason I tell you guys to take it with a grain of salt, because the flow is more prone to failure. It's for that simple reason. They're more prone to failing. Okay, like I stressed to you guys that the top shelf type action, the stuff that catches the really aggressive activity, all right, they're losers. But there's no question as far as winners to losers when you're playing that action. Right? We all, like everybody on this webinar, probably knows the loser off aggressive activity. Right? Everybody talks about that name continuously. What's wrong with that IGT? Damn, that IGT was a dog. God, why isn't IGT working? You know what I mean? Everyone talks about the loser, but people forget to realize some of the ridiculous winners that came out of that top shelf activity. During earnings, you will see a lot of that top shelf activity go south. Okay, go south. Whether they're hedging shorts, whether they're replacing stock, who knows? We have no idea. You see that a lot too, especially from people who claim they follow flow. Oh yeah, they must have been hedging a short. Why? Because it was a loser? We have no idea. That's the whole point. If we knew which orders were hedging shorts, right, then things would be a lot easier. We never know. So that's the problem with earnings activity, is that you're going to see a lot more of that better looking action fail. And that some of you may be okay with that if you're managing your bankroll and risk properly. Some of you may be okay with that. Listen, Jesus, I'm sizing down, or I'm putting in what I'm willing to lose. Maybe I get lucky with a big earnings report, and if not, I lose what I put in. So I don't mind that. That's what I mean. That's totally fine if that's your game plan. But if you're not sizing properly and managing your risk, I get complaints from the one or two losers coming off big activity. I hear people crying about. If you're going to see more or less of a winning percentage, I can imagine. So that's why I stress it as much as I do, and even myself, I could swing in a smaller way and do exactly what I told you. It's definitely an option. I don't think it's stupid idea per se. But I have more confidence in the real stuff, and I'm okay sitting around waiting for it. I'm okay with it. All right. Anybody have any questions, especially you guys in the room or private Twitter? Especially on private Twitter, I know, like, if you're looking at the order flow, because in the room they got me. I'm running my mouth constantly about how this earnings flow is a waste of time. It's a disaster. Try not to do too much. Take it nice and easy. But on private Twitter, I know it could probably get tough. You're seeing the action come in. You're seeing some size come in. And I know with myself, especially early on, even when I knew it was earnings flow, but I saw a bet that would excite me, I would say, well, maybe this guy knows something about earnings, or and make that excuse. So if you guys have any questions, private Twitter in the room about anything I just mentioned regarding earnings flow, now is the time to ask, so you can prevent yourself from getting in trouble. Ranchero saying we made money with IGT. What's the problem? No, Ranchero. What I mean when I say that is, there are some people, especially on the newer side, who like to keep it simple. Okay, they buy when a name catches action. They don't piece in. That's where they buy, and they're looking for that nice hit. Okay, and in that category, and I admit, I would label it, IGT off the action it caught was a loser. There's no excuses. I was expecting a lot better performance out of IGT. But what my point of even bringing it up was, we all talk about the loser, right? People always ask questions about the loser. Why was it a loser? But we never talk, about the winner. Maybe because these people weren't in the winner. I don't know. But the point to take away from all this, it's not about IGT. It's not about Campbell's Soup. You know what I mean? It's not about PayPal. It's not about FDC. It's about the whole ball of wax. And if you played them all or most of them, and you took the proper risk management, how would your P&L look? That's what it comes down to. That's simple. That's what I try to stress. It's not about that one name. Any one of us, okay, we could say, all right, they're loading up in Campbell Soup. I'm loading the boat here. All right. If it clicks, I'm the Mac Daddy. All right. If it loses, I'm going to cry the blues. I took a hit. I'm miserable. And we all can do that. We all can do that. There's a lot of luck in that, right? You touch the right one, you're a happy camper. If you're unlucky and there happens to be the one loser out of the bunch, you're miserable. But, the longer term, and if you're looking to focus on consistency, and that's what matters in this game, it's not about the one name. It's not about the one name. It's about all those names that caught that type of activity, that special type of activity, and the whole ball of wax. If you did the right things on your end, where would you be now? Are you happy with those results? That's what it comes down to. Yeah, and the list goes on, Paul. Micron. There's a good amount of winners, but you know what I'm talking about. Everybody knows the loser. Like, if I asked you all what was the loser out of the recent rally that caught legitimate action like that, we would all, I guarantee you, everybody be throwing in IGT. Because we all remember the loser. And whoever was involved in that loser, maybe they only played one of the names we're talking about. So they had one winner, one loser, and, then they don't have the confidence, or whatever the case may be. But what I'm trying to say is focus on the big picture. And I was trying to relate that to what we're seeing now, earnings flow, that we're not going to see that special activity. Because, again, the definition of sharp activity is when the order flow is giving me a clear picture of what that player is looking to accomplish. Okay? Campbell Soup, there was no doubt in my mind whoever was buying those Novembers was just trying to accomplish one thing there. Okay? PayPal, which we just got the news yesterday of who was doing all that $1 million sweeper activity. There was no doubt in our mind that that guy was just looking to accomplish one thing, or girl, or whatever it may be. So, that's the name of the game here with flow. There's action all day long. There's stuff to day trade. There's stuff to roll the dice and weeklies. But you want to get to a point where your positions are based on that top shelf activity. And then, the rest is in your court. You have to manage your risk properly and all that stuff for it to be successful consistently. All right. But the moral of the story, because you guys know I can rant and veer off in all different directions when I talk about this stuff. But the moral of the story is now during earnings season, we're not going to get it. There's going to be stuff disguised as it. There's going to be order flow that looks like it, but it's not it. Okay? Because earnings are in the way. It's that simple. All right. But yeah, so here's the action again, and then I'll get to a couple of your questions and maybe names you guys are looking at. Another thing, I know a lot of guys who focus swing trading that I've traded around that utilize flow, what they like to do, if they see a name that catches action, okay, and they're almost at the point where they want to make a play on it, but because of earnings, they don't. They create a watch list of those names to watch off earnings. Okay? And then if they see any action come in post earnings, then obviously they'll revisit. And that's another thing, if you think about it, okay? We see a lot of action go into names and they report earnings. Sometimes they do nothing. Sometimes they go down off the earnings. You would think those guys come back again, right? If they were that bullish going into earnings, which was just a week out, wouldn't they look to add to that position if the stock is weaker? Right? You remember Campbell Soup, what they did? The stock looked awful by the day, but they continued to buy it and just ignored it. Right? The same thing with PayPal. Caught Amazon news that Amazon was going to put them out of business. What they do? They bought even more size. So you would think if it was real buying into earnings, they would take advantage of weakness. But a lot of times you never see them again. Like a name like Corning, GLW, I wouldn't be surprised we don't see them again for another 3 months. And that's just the way it is. Did they come back for Google at all today? No, MJ Google was just straight up earnings play. You know what I mean? And that's another thing. They're not the guys we like aren't buying Google over here. You remember where Google was catching the size activity is where nobody wants the thing. Where nobody wants them. Oh, I'll give you a good thing about earnings season. Okay, it's not all bad. Trust me. All right, Netflix. Okay, while every bull lost money and every bull's getting frustrated here. To be honest, we haven't seen, and those of you who have been with me a while now, a couple of years now, know exactly what I'm talking about. We haven't seen a Netflix, quote, missile in a long time. Okay? A long time for Netflix. All right? Netflix was notorious for catching those big, huge, good-looking sweeps. All right? But as this stock got up here and is north of plus 100% on the freaking year going into earnings, that they're not going to buy a name like that. Okay, so that's why we didn't see any of that action. Now, all of a sudden, boom, weakness off earnings, stock is struggling. If this thing lingers around here. Flow is already quiet. We're seeing little Pepsi Cola Racketeer sweeps, tiny. Okay. If this thing goes quiet and dead, the flow, and this thing still has trouble to muster any rally, we're on watch for a missile here now. We're on watch for a missile. And think about that. All this time, if you remember this whole rally where we were talking about, it's tough to chase, it's tough to get bullish here, it's tough to put on size here, that pretty much got washed out, and to be determined how much more. And this is the setup you were waiting for, kind of like MU of this. Wait, was it this or this? This, right? Yeah. So kind of like this. Remember Micron? Went bonkers. And then, you finally get consolidation at the weakest point. Whoop, they come in, Mr. Tepper, and you had your entry again. So that's what you look for. And maybe some of these big tech names, some of the hotter ones. I mean, Google was up nice today, but I guess with the implied vol, it's not enough. That's a whole other story with earnings. But maybe some of these big tech names finally rest. No, yeah, there's not. I mean, we're talking about just a couple of days here. What, a week in Netflix? So no, we just got started here off weakness. I'm saying the good that can come out of it is if this thing hangs around here and the riffraff is going to have a tendency of forgetting about it. They're going to keep taking stabs, trying to catch a bottom, and they're finally going to give up. And then when it does catch that missile, I'm telling you already, we've seen it time and time again. When it does catch that missile, people will be reluctant to make a play on it. They're not going to want to make a play on it because Netflix has been tough. And that's when you have a decent shot. Yeah, just like that Baidu that time. You're 100% right. You're 100% right. All right, but that's the good that can come out of, earnings, especially the hotter names. And, a lot of position players that I know that trade these names, that's what they're looking for. They're not doing what you see people on Twitter doing constantly. They're not doing that. You see people on Twitter constantly, they buy Netflix, Facebook, Amazon, Google, literally every other day. Every other day they're trying to make a play on them. So that's okay if you're playing small trading, whatever the case may be, but to find a nice entry to take a decent size position with a decent risk reward, you need stuff like this to happen. All right, but what other names you guys looking at in regards to tech? Anything you guys are playing? How about any run-ups until earnings, those type of things, or anybody liking anything out there right now? Avgo. Yeah, somebody was talking about Avgo the other day. Oh, yeah. Wow. Yep. Now, they made that acquisition, right? They made that acquisition, and that's what killed it. You know what would be nice, Ranchero? I know you don't even want me to talk about it, but if these little gamers had some consolidation. You know what I mean? They're showing signs of it now. I don't know when they report. But they sure can use a little shakeout and breather there. Even now you got a decent dip there. You know what I mean? Here's an example for like a snapback trade I'm talking about. If this ATVI is down, let's say tomorrow morning, market's weak, and you got some sweeper activity come in, you got that trade back to the middle of this range type thing. Who knows? Maybe even goes to highs by the time they report. I don't know when they report. Teva. Yeah, biotechs. There's been some biotechs that have looked pretty solid. Teva, wow. Yeah, Teva's been an animal. Teva and that THE has been an animal. Teva saw a little bit of action recently. Yeah, ABBV had a sweep. Oh, you know that, Paul. ABBV had a sweep on Friday. Nothing major, but was catching put action. Finally caught a call sweeper and had a little bit of a lift. You got earnings coming up there, though, Paul. You know that? Right here. What's that? 727? Oh, you know that? Yeah. But, for a quick trade, already looking good. Dropbox, there again today, caught some action. You have earnings early August. I don't know if you got enough time to, catch a move beforehand. Yeah, she likes to do these quick pops. Depending on where you buy it, you might be able to flip it. Remember Ranchero? We bought weakness. We end up flipping it the same day. Sometimes this thing can move enough where you get that quick move. So you might be able to see a snapback here too. But you do have earnings coming up. I think it's August 7th. Yep, CRM, always a candidate, was down today. You know, perfect candidate. Tomorrow, some weakness, let's say, early morning. Definitely worth a look. Definitely worth a look. What's that? EL, Estee Lauder. Is that still hot, that name? Oh, that finally cooled down. I remember that thing had a sick run. Estee Lauder. Damaris is saying, what do I make of Ford Jan calls? GM yesterday was trading off the hook. Earnings. Earnings. You know, that's what I would make of it, Darmish. That's what I mean. It's an easy solution for me. If I see earnings, I don't even have to rack my brain. Because even if I think I've figured out it's clearly a bullish play on the name, it still potentially is earnings related, no matter what you do. How do I know that guy who bought $1 million worth of GM calls didn't sell stock later that afternoon and is replacing it with calls, which is pretty common into earnings? You just, there's no way to know those things, and the odds of those things going on go up dramatically around events like earnings. Well, you can look anywhere, Brant. I think does Yahoo Finance have earnings dates? Brant's asking, where would you look? I look on the stuff I use, like Trade Alert and stuff like that. Thinkorswim, you use Thinkorswim, you could get the earnings dates on there. Market Chameleon, there's a million things. This is Trading View, and you could have where they list it right on the chart for you. Yeah, Paul saying just Google it. You'll find it all over the place. But yeah, and sometimes, yeah, if you Google it, you'll see it comes right up, all that stuff. But you got to know when earnings are. Otherwise, I don't think you can play there in earnings season, whatever. Yeah, I know Tim Ranchero was looking at that TLT play too. So what happened was yesterday into the weakness, we saw some TLT activity come in on the call side. And then today, there was some size put buying in TBT, which sync up, So bearish TBT is bullish TLT. And, yesterday and today we saw them position bullish TLT here. All right. So that may be something you're interested in looking at over the short term here, maybe to avoid some earnings. It's ETF action. Can't get too excited about it. But Tim, you guys know Tim in the room, option trader. He's been solid with these things. He's played this TLT TBT combo two or three times that I can remember, and he killed it. So, if it's your cup of tea and you know what the hell you're doing, these things, trade. Profitable trade is a profitable trade. Yeah, William Struck is talking about PVTL. That's a potential bounce back name. Yesterday we saw nothing major, but a sweep in PVTL. Um, Wait, they do have earnings? I don't remember, William. Does PVTL have earnings? I think we were talking about a run up into earnings, right? Not, oh, September. Okay, September. Yep. So, yeah, this is exactly this is what I mean here. Okay. So rather than buy it yesterday up a buck 50, whatever the case may be, or chase it this morning because you think you missed it, right? It shook everybody out. That easy, just like that. Whoop. Whoever was chasing that move is gone. All right. Can it trade lower? Of course it can. But you're still better off that you bought it here than you were yesterday. So that's why just that little move, um, can turn you getting shaken out to a profitable trade. And you know how many times I wish I had $1 for what MJ's saying, that I've heard, oh, what an ugly candle, only for the thing to snap right back and explode. You know how many times? You know how many times, honestly? It's because, of course it's an ugly candle. It shook out everybody who chased that thing. A lot of times, MJ. A lot of times. I know. Ranchero was saying I love ugly candles. I do too. I'm being honest. I'm not even a candle guy. I just, you know, because here's the thing. The ugly candle, can there be follow through weakness tomorrow? Of course. Okay. But that tomorrow can turn into a beautiful candle where they shake them out and all of a sudden this thing is going to fly, you know? And look, in reality, this is how it trades, man. This is how it trades. Look at this, you know? This is how it trades. And it doesn't look like that on the chart. It's misleading. But this thing can move around. These are probably dollar increments. This thing is flying around here, you know? So you buy up here. Oh no, this thing's rolling over. Ready to run. Oh no, shook it out. I mean, this is just the way it trades. It's still in this consolidation net. And, you want to buy weakness so you have the potential at least for that cushion, just in case you're a little early on it. But yeah, if you liked it yesterday, today's not for a trade. I'm talking about nice and easy. I'm not talking about load the boat, Miss MJ. Nice and easy. Because again, everything out there, I'm not impressed with anything out there right now. Anything. Even the stuff, and we're not seeing a lot of it, even the stuff that's not earnings related is likely a play on somebody else in the group who's reporting. Right? We see that all the time. Like for example, when the banks had earnings, they were buying, I forget what it was, JP Morgan, Citigroup, and they were buying Bank of America too, even though they weren't reporting. They were the last to report. They were buying Bank of America with the rest of the banks because, chances are the banks are going to move together. Very rarely do they move on their own. What are the groups? Anybody? That's the one thing I'm a little discouraged about. I don't have a group. You know what I mean? I don't have a group that's set up well, especially on the sentiment front. Anybody have any groups they're looking at? Any subsectors, any groups out there? Nothing. You had the financials, XME. Oh, that's the mining. Is that mining? XME. So who's in this now? This is Bitcoin. That's a good one. Freeport and all them is in this one. XME. You know which one caught action today a little bit? The materials XLB. So they're, as far as sentiment is concerned, that group is neutral-ish. Not bullish, not bearish, kind of neutral. Energy, pretty neutral right now. Retail, that was the other one, pretty neutral right now. The financials are hot, approaching hot. Technology was pretty hot. You had some of the juicy sectors pretty hot. New home data and GDP Friday, the materials. Yep, and you got probably the home builders too. Are they in that? Or are they just in the ITB? I don't know if they're in that. They're in that? Let's see, DHI. Oh, DHI got beat up today. These home builders can't get out of their own way. They can't get out of their own way. Yeah, so that's the story, guys. That's the story. I would hang in there, little by little. We're gonna have names. Those of you like the big names, Netflix is one to keep an eye out for. If you like trading those big names, otherwise we got to get through this week. More importantly, some of the bigger ones, and will be XHB home builders. XHB. As far as sentiment's concerned, we almost got to a decent spot. I didn't even see where we closed. I got to check that out. Is this? Yeah, this was it. Yeah. Look at this. Look at this. If we would have closed near the lows, we would have been really close. Really close. And like Steven pointed out today in the room, wasn't even a red day for crying out loud, just a reversal. So I got to see where we close because we had a little bit of a squeeze into the bell. All right, but I will say this unless there's some drastic difference in some of the sentiment stuff we look at, I would say tomorrow weakness, especially in tech, will be an opportunity. The CRMs of the world, all the tech that was down today, if there's some carryover weakness tomorrow, hopefully we'll see maybe even a little bit of flow for a catalyst so they can squeeze them back. All right, but that's what I'm going to be looking at, and hopefully I can catch it intraday because I'm not really too interested in swinging too much here. I'm going to wait till we get through most of the numbers. Anybody have any last words? Anybody have any last words before we run? I hate these webinars during earnings season because honestly, there's not too much to talk about in regards to flow. But we could always, you could touch on strategy and stuff like that. Always something to talk about in this game. Anybody have any questions or anything? For those of you who are new, especially if you're new members or trial members, go to wallstreetjesus.com right here, strategy, bink. All right. So this way, you know what the hell we're talking about during those 3 days in the room. Because if you come in completely raw without even having an idea of what a sweep is, it's going to be hard for you to get a feel for what the hell we're doing. All right, so anybody who's interested, you could go to the strategy section, wallstreetjesus.com, and take a peek there. Yeah, MU had some late flow, Ramahan, but, August cheap action, nothing that excites me. Potentially could be one of those snapback plays, Ram, if you're interested in that. In other words, tomorrow, follow through a little bit of weakness, look for a snapback. Yeah. I think you can look at that for any of these bigger tech names that haven't reported yet. Just be careful in semi-land because you got that whole tariff thing weighing on them hard. They reversed hard today, huh? Look at that. You got to watch with these semis. Micron not as bad. AMD has been a stud compared to some of the others. Uh, I don't know. That's a good question. Nvidia, I guess it hasn't weighed as much. If it has, some have gotten smoked out there. Some have gotten smoked. Apple would be one of those snapback plays, but I think she closed up today, right? $1.39. Yeah. So, MJ, remember MJ? I think that was you, right? We had that conversation. Like Apple had that dip. It looked scary. Remember? People wanted to buy it up $2. Then it was down $2. Nobody wanted to buy it. That's where you got to fire if you're looking at the name. That was your RAM? Yeah, so that's my point. You know what I mean? If you're interested in the name, if you're not, then you could take the approach I'm taking, sit on my hands and day trade. But if you, like you were saying, you were looking to get long Apple, that was your plan. Okay, so rather than buy it on a day up to where it looked its best, wait. You got it the next day, it was down a buck and change. It looked awful to everybody. And now you got a little bit of cushion to work with, Yeah, actually, you timed it perfect, Ram. Amazon is Thursday too. Wow, I forgot about Amazon reports this week too, right? You got a lot of bulls in the air this week. Sheesh. What are they going to do with this thing? They can run it from here? They're not running Amazon from here. I'm sorry. They can't. They can't, can they? Look at this thing. Unbelievable. Should be interesting. You can't play the options though. You can't play the options. Yeah, maybe they run her off a cliff. I don't see how you could play the options here. They're so junked up and juiced up and risk reward wise. Yeah, you're gonna have to make a play, one of those subsector or ETF plays. Maybe you get a bigger bang for your buck, but you can't play a name like this with a run like that, juiced up like this. You can, but it's just not worth it, I think. Exactly. All right, guys. I know it's a tough thing. Trust me, I'm as big as a degenerate as anybody out there. Patience, play, keep yourself entertained, nice and easy. Allow the bigger and better setup to set up. It will be here. Trust me, they always come around. We just got to wait through some of these earnings. All right. XLK overheated on the chart versus sentiment neutral. XLK as a sector was hot. See, the problem with tech, Paul, you got so many different types of tech. That's where the issue comes in. XLK as a sector was hot. Don't worry about it. No problem. No problem. But yeah, XLK as a sector was hot. So I don't know exactly what's in that XLK sector that makes it so hot. Is software in there? Maybe some of the software names are in there. You know what I mean? That's where it gets tricky, some of these sectors. Oh, the big guys are in there? Like Microsoft and stuff? So, yeah. Yeah, you got that issue. There's not too many on the sector front, there's not too many things that look appealing. Now, all that tells me, again, if you're looking to be tactical, I wouldn't worry too much about that. When I look at that stuff, what I would get concerned about is allowing winners to run. Okay, because if a group is already hot, usually what happens is you're going to see sellers into any further gains. That's what I would take from it. So, but if you're looking, you're looking to be tactical, you're looking to buy, let's say a CRM down 2 for a snapback, she still could snap back. For a whole new leg higher, I wouldn't look if they're overheated. All right, guys, be good. Good luck the rest of the week. Good luck to you earnings degenerates. All right. And I'll see most of you tomorrow in the room. Have a good night, everybody.